You're watching Silver News Daily. Subscribe for more.
Did you know that the US dollar's dominance could be coming to an end sooner than you think? Andy Schectman, one of the world's leading experts in precious metals, is sounding the alarm. He says the dollar is facing an unprecedented collapse. And silver? It could be the biggest winner of all. We're talking about Brics nations ditching the dollar, US states moving towards sound money, and a potential silver price explosion unlike anything we've seen before. And the craziest part? This isn't just speculation, it's happening right now. So before you dismiss this as just another doom and gloom prediction, stick with me. Because what we're about to uncover might just change the way you see money forever.
The people that know the playbook, they have a playbook that allows them to do things, misdirection, allows them to do things in a manner that hopefully minimizes the competition. We start by quietly reclassifying gold tier 1. We then proceed to slowly draining the world's exchanges. The rise of the others, as you and I started talking about in 2020, those being the third group of large traders on the Commitment of Traders report that came out of nowhere, thought to be primarily sovereign wealth funds that were standing for delivery all over the place. We see repatriation from the Bank of England and the New York Fed by 40 plus central banks. Bank of India just repatriated almost all of their gold, over 100 plus metric tons since 1991, and they continue to buy more year over year than they did the previous year, taking possession of it all. We see reports all around the place that these central banks are not reporting as much as they are actually taking. Over half of all the gold sales or exports since March are really unaccounted for. No one knows who bought them. There was something similar in 2021 or 22 where Bloomberg came out and said, you got like all 400, 500, 600 metric tons of gold that have been shipped, and we can only account for about 50% of it, and they assumed the rest were going to the Brics nations. You have things that are happening like China buying up doré and concentrate from Latin American, South American countries, which disintermediates the marketplace. The how much is being bought, it has far less consequence on the prices. You're seeing huge volume all around the world in all of the other exchanges. How many people know that Dubai, the exchange in Dubai, UAE, just surpassed the LBMA? It's the second most active trading market in the world for gold. And if you take the combined volume of the Shanghai metals and the Shanghai futures, it's right there as well. It is putting the COMEX and the LBMA in serious trouble. We saw this January, we saw massive deliveries in both gold and silver. 50 plus million ounces of silver delivered in January. 15,645 or so contracts in gold in the month of January. 15,000 contracts. That's almost 50 tons of gold coming off. Those are deliveries off of COMEX. And we see states that are doing all of this. And I look at this and it blows my mind that it is so misdirected by the people that tell us what's important. It's unbelievable. Most people don't understand what's really happening, and we try to explain to them that the softness in the physical market, it's ridiculous. It's the most contrarian.
For decades, the US dollar has been the backbone of global trade, until now. Nations around the world are actively moving away from the dollar, and the implications could be disastrous for its future. The BRICS alliance, Brazil, Russia, India, China, and South Africa, has been leading the charge, challenging the dollar's dominance by trading in their own currencies and accumulating massive reserves of gold and silver. And now, they're expanding. Countries like Saudi Arabia, UAE, and even Argentina are joining the movement, all looking to distance themselves from US financial influence. And here's where it gets serious. For the first time ever, Brics nations are creating their own gold and silver exchange, cutting Western banks out of the picture. This means they'll have the power to set their own prices for precious metals, bypassing the traditional COMEX and LBMA markets, which have long been accused of manipulating silver prices to keep them low. But it's not just Brics. The US itself is starting to shift away from fiat currency. Over 20 states have introduced legislation recognizing gold and silver as legal tender, effectively rejecting the Federal Reserve's paper money. If this trend continues, it could signal the beginning of a full-blown currency reset. So, what does all this mean for silver? Could we be witnessing the early stages of a historic silver bull run? And if the dollar's power continues to erode, where will that leave those still holding cash? Let's take a look at what central banks are doing, because their actions are speaking louder than words.
Indicator I've ever seen. And you're right. Where are all the people? Well, they're into a handful of stocks, 7 of them, basically. And you saw what happened, how fragile the whole ecosystem is, right? These guys over there, they're playing in terms of years and decades. And us here in the States, as foolish as it is, where instant gratification really isn't fast enough, where a 30% gain in gold is laughable, where Richard Russell said you make 7 a year, 7%, you're a rock star, over quadrupled that. And it's a joke because it didn't go triple digit in a few weeks or months and this is all happening where everyone's in 7 stocks into Bitcoin and into money markets, 7+ trillion into money markets. You want to talk about a potential rug pull. I mean, you blow up one big bank like Bank of America, where guys like Gregory Mannarino screaming forever that this is a dangerous bank. Ted Butler, while he was still alive, bless his soul, spoke very indignantly about them, though they were the big short in both gold and silver, replacing J.P. Morgan. 1 billion ounces short in silver, 40 million ounces short in gold. Blow up a bank like that. Let people really understand what bail-in legislation is and watch how fast the whole system, bang, blows up that fast. That fast, where people run to yank their money out of the banks. You think you've seen a scary environment? Watch what happens with a real bank run that blows up the entire system, sends interest rates spiking and bringing everything down. And then you talk about Bitcoin and you know, the one thing I haven't read Catherine's report. I know you sent it to me. I was so busy all day. I want to get to it, but the one thing that I'm concerned about, if it even warrants being concerned, it certainly feels that way to me. I suppose I need to research it more, but with the underpinning of all of the stable coins and treasuries, as the rest of the world has shed treasuries and continues to let them roll off the balance sheet in favor of commodities, real assets, we're all going into Bitcoin. And the central banks aren't just slowing down their acquisition of gold, they're doubling down. The last few months of reported statistics, the end of the year showed a doubling of the 12-month moving average each month. They're not stopping. They are increasing. We see Saudi Arabia, we see China be caught by the import-export numbers. Sorry, we've probably been buying more than we said, or we didn't report that. And if it's bought by the Liberation Army, People's Liberation Army, it's not reported, even though it was purchased by the PBOC. We underreported it. Same thing with what is going to Saudi Arabia. With all of this gold that's unaccounted for, do you really think they're reporting it all? Of course not. They're also the largest producers in the world, the second largest producers of silver in the world. They're doubling down their efforts. We are all misdirected into risk-on assets, and these folks are buying all of the world's commodities. I talked at length. The Chinese bought the London Metals Exchange. They're not just buying precious metals. The London Metals Exchange are all the base metals. Look at all the countries on the Belt Road. Look at Indonesia.
If you really want to know where the financial system is headed, follow the money. Or in this case, follow the central banks. Because while everyday investors are distracted by stocks and crypto, the world's biggest financial institutions are stockpiling gold and silver at record levels. China's central bank? They've been quietly buying gold for 19 straight months. India? Their silver imports skyrocketed from just $2.2 million in 2023 to a staggering $1.44 billion in 2024. And it's not just them. Countries like Russia, Turkey, and even Saudi Arabia have been ramping up their reserves, signaling a massive shift away from the US dollar. And here's the kicker. These aren't just minor adjustments. This is a full-scale financial realignment. In the last 2 years alone, central banks have purchased over 2,000 metric tons of gold, the highest amount in history. And silver? It's quietly following the same trajectory, with more and more institutions moving into physical metal. Why? Because they see what's coming. Inflation is eroding the value of fiat money. Debt is spiraling out of control, and global confidence in the dollar is crumbling. But what does this mean for the average investor? If central banks, the institutions that control global monetary policy, are ditching dollars and hoarding precious metals, should you be doing the same? And more importantly, could silver be the key to protecting your wealth in this massive economic shift? Let's dive into how Brics' new metals exchange could push silver prices into uncharted territory.
In Jason's argument, digital forms of it as well. That's where we're moving. What does that say? And I would also add, just like we saw the others, which were the sovereign wealth funds, who were buying after tier one revision and all the central bank buying and repatriation, their buddies and their wealthy cohorts started buying under the cover of sovereign wealth funds. As this trend continues here in the States, do you not think the people in the know are going to buy every damn thing that is still left unaccounted for? And while there's a massive overhang of inventory right now, lowest premiums I may have ever seen in my career, I can't even believe it. I mean, is the euphoria surrounding Trump getting our culture back that deep? I mean, I get it. I spoke to that as much as anyone. The bizarro world, the nauseating stuff that we saw over the last 4 years. God bless him and guys like Kash Patel and all of the people he's bringing in to restore our culture. God bless him for that. And I feel much better as a father, but you're all making a mistake. And I'm not talking to you out there, but people out there, if they believe that the monetary and fiscal irresponsibilities and distortions that were created through all of this over the last several years will not be accounted for. They will. And this is what the rest of the world is doing as we're rushing headlong into the risk trade, maybe at the worst time. So yeah, I mean, you add the states to this mix, I think it could be huge. And maybe that's part of the reason why we saw nearly 16,000 contracts standing for delivery in January for gold.
For decades, the price of gold and silver has been controlled by Western financial institutions like the COMEX and London Bullion Market Association, LBMA. But what happens when that control is challenged? Enter the Brics Gold and Silver Exchange, a newly proposed trading system that could completely reshape the precious metals market. Russia has unveiled a plan to create a Brics-backed exchange, allowing its member nations to trade gold and silver without interference from the West. Why does this matter? Because the COMEX and LBMA have long been accused of suppressing silver prices through paper contracts that flood the market without any real physical silver backing them. But a Brics metals exchange would focus on physical metal transactions, meaning silver's true value could finally be unleashed. And if that happens, the price could skyrocket overnight. Here's where it gets even more interesting. China and India, two of the biggest Brics nations, are already buying up silver at record levels. They're positioning themselves before this new system launches, which could mean they expect major price movements ahead. If Brics successfully pulls this off, we could be looking at a world where the US dollar no longer dictates the price of precious metals. Instead, silver could be priced based on actual supply and demand, not manipulation. So, with Brics working to rewrite the rules of global trade, what does this mean for the US and its financial system? And why are multiple US states suddenly embracing gold and silver as real money? Let's break it down.
Just became a full member of Brics. What is Indonesia but the largest producer of nickel in the world? Their president, Widodo, said we need to build an OPEC-style cartel for rare earths as well. Everything they are doing is aligning with countries that are either strategically located via sea or land and or have massive supplies of natural resources, many of which are underdeveloped nations and working on these deals. And we're all focused on risk on assets. And it's kind of like the generation of gamblers we are breeding is really not a good idea. You grew up when we did, you work your ass off to get somewhere. You grind, you let the laws of compounding be your friend. You make a few percent each year, you keep on going, you keep on saving, you keep on grinding, you save, you invest, you reinvest. This is Austrian economics. What we have right now, it's speculation land. And yes, there have been people that have become very wealthy. FOMO is raging. The dopamines that flow from your brain making all this money is raging. And is it right? I don't know. I guess only time will tell, but I'll tell you this, the biggest money in the world, the central banks would say, well, I would say, well, why aren't they doing that? I mean, they talk about it a little bit, but why aren't they doing it? And why are they hiding what they're doing with metals and with commodities? Why are they not being forthright? Why did the most powerful bank in the world reclassify it to begin with as tier one? Then we get to the states. And you're right. Now, Jason and I talk virtually every day, and we talk about this all the time, this growing chorus of states that realize their constituents have been screwed for a long time. And it's time to let them have sound money. And the Constitution allows them to issue gold and silver coins or specie.
Here's the harsh reality. The U.S. economy is on borrowed time. And the numbers don't lie. The national debt has exploded past $34 trillion with no signs of slowing down. At the same time, inflation is quietly eroding the purchasing power of the dollar, making everything from groceries to housing more expensive than ever. And the Federal Reserve? They're trapped. If they keep raising interest rates to fight inflation, it crushes the economy, slowing down business growth and making debt repayments nearly impossible. But if they cut rates to stimulate the economy, inflation spirals out of control. This is exactly why foreign countries and even U.S. states are moving away from the dollar. They see the writing on the wall, the dollar is losing value, and trust in the U.S. financial system is collapsing. But here's where things get even more dangerous. If confidence in the dollar continues to decline, we could see a massive wave of de-dollarization, countries dumping their U.S. Treasury holdings, sending shockwaves through the global financial system. And when that happens, the rush into gold and silver could be unprecedented. So the big question is, how bad can it really get? Could the U.S. be heading toward a full-blown currency crisis? And if so, where does that leave silver? Could it be the ultimate hedge against this economic storm? Next, we'll uncover why silver's role in the next financial reset could be even bigger than gold.
By doing such, remember, you as the long have the right to say, no, I'll stand for delivery, thank you. And that's what we saw in January. Massive deliveries, right? So what if everyone says, I see you guys are screwed. Delivery, please. Now, isn't that what the Hunt brothers did? Sure is. Hunt brothers saw the same exact things, and the exchange changed the rules on them. Said you can go long just 1 million contracts or so. You can go short as much as you want. Please, thank you. I mean, stupidity. But the point of it is that, yes, that is the rumor. But I would look much past that and say what you see are these claims, these promises of delivery in London. You got a whole big vault full of IOUs and a little bit of gold. And I've been saying forever, and maybe this is it. You know, the little boy who cried wolf, here I am. One of these days, wolf will coming, and maybe this is it. Maybe they all say, we got them cornered, y'all. Let's stand for delivery and watch what happens. And that's what they're doing. They're getting it home preemptively in case there are tariffs because they know they cannot come up with the gold. But lo and behold, having the same problem in London with these delivery delays. So, you know, you can only manipulate a market over a very long period of time by pushing it in the direction that it is going. They are trying to hold back the global demand of powers that are as challenging as us, especially when you combine them all together. Their coordination, their motivation, their sophistication, and their wealth have all gone parabolically higher over the past 2 decades. And now I think they're enjoying watching us kind of squirm on this. And no, if they wanted to, they could turn up the heat just like that. But they've been playing the long game so they can get as much as they can. If they turned up the heat that fast, it would have been force majeure a long time ago. The rules would have been changed. So let's beat them at our own game, they're thinking. Do it as long as we can until we have to pull the switch. And then things get very frightening in my mind. And that's the beginning of a reset. One of these big banks, the Western banks, fails to deliver, creates a daisy chain of defaults and of forfeitures and bankruptcies and counterparty risk and credit default swaps and like bringing in AIG into the moment again. And boom, that's how it happens, because they don't just own gold. Remember, these banks have a lot of fingers and a lot of pies all around the globe, and they're all incestuously tied together. So, yeah, I mean, I don't want to over dramatize it, but that is ultimately, I think, something you could see happen if the powers that be on the other side of the table really wanted to turn up the heat.
It's not just Brics nations rejecting the US dollar. Many US states are starting to do the same. Right now, at least 23 states are pushing legislation to recognize gold and silver as legal tender. This means citizens in these states could soon buy, sell, and even pay taxes using precious metals, completely bypassing the US dollar. Think about what that really means. If states are legally recognizing silver as real money, what does that say about the dollar's future? This isn't just a symbolic move either. Several states, including Texas and Utah, have even created state-run gold depositories, allowing residents to store their wealth in precious metals instead of fiat currency. Some proposals go even further, suggesting that state pensions and reserves should hold gold and silver instead of U.S. treasuries. And here's where things get really interesting. If the Federal Reserve's money is so strong, why are these states rejecting it? The answer? Confidence in the dollar is crumbling. With record-high debt, endless money printing, and inflation eating away at savings, state governments are seeking an alternative, and that alternative is precious metals. But let's take a step back. If individual U.S. states are already making this move, how much longer before the rest of the country follows? And more importantly, what happens to the dollar when its own citizens stop trusting it? Let's take a look at the growing cracks in the U.S. economy and why a financial crisis could be the final push that sends silver soaring.
Now it takes 4 to 8 weeks. And it's not just from the Bank of England vaults. Evidently, it's from all sorts of vaults all throughout the LBMA network. And what it tells you is that they don't have the gold to make deliveries. It's not taking that long to refine them. It means if they have to refine them, they don't have the gold. And that means the gold that they show that they have is not for sale. No one's getting rid of it. And if they don't have the gold, how close are we to some sort of an event where, I think in London, the numbers that if I remember, David Jensen talked about, they trade twice global annual mine supply per day, every day. In silver, it's 3.5 times annual global mine supply per day. And to his numbers, 90+% of all of these trades are paper naked trades. Now, the theory is that everyone's worried about a 10% import tariff on gold, and more so than silver. The argument against silver is that we're in a supply deficit here in the States, so he won't do it because he has to import it. Don't know if that's true or not, but it would make sense. With gold, on the other hand, you have, I don't know, I haven't looked lately. There's a guy on Twitter that does a great job of showing the rehypothecation of gold, but it was always in the neighborhood of 1,500% or higher. I mean, that's just conservative. It's probably much higher than that, but that means that the contracts are sold over and over and over and over and over again. 15 people have the same contract thinking they have their own contract is what that would basically mean. And cash settlement is very, very close at that rate. I was talking to a guy the other day at dinner in my community, and he is involved in aluminum and had a force majeure moment where his manufacturing business needs lots of aluminum, had contracts they couldn't deliver, they cash settled. It's force majeure. That's what we're setting up for here. And these players are saying, man, I got all these contracts. And when you have a contract, if I go short and you go long, well, most people just cash settle. Most people like Miles Franklin, 2 bottles of water here. This is 5,000 ounces of gold in my warehouse, 5,000 on COMEX. I sell here. I own physically here. If the price in my warehouse drops by $100, I'm down $500,000 in gold, but I went up 500,000 on what I sold short. I'm not looking to take delivery. I have it covered. A lot of the people are just speculating the way they do in buying stocks or going to the casino, and others are manipulating the market. And they manipulate it by naked shorting because they got massive, massive checkbooks. And maybe they're even being told by the Western elite, go ahead and do this for us, would you? Thank you. And
Throughout history, every major financial reset has one thing in common. Hard assets replace failing currencies. And this time, silver may play a bigger role than ever before. Think about it. When fiat money collapses, governments and investors rush toward tangible, universally valuable assets, like gold and silver. But here's the twist. Silver isn't just a monetary metal, it's an industrial powerhouse. With global supply chains shifting and new energy technologies exploding, silver is in higher demand than ever. Electric vehicles, solar panels, and military technology all depend on silver's unique properties. Unlike gold, which is primarily used for wealth storage, silver is being used up at an accelerating pace. And yet silver is still trading at a massive discount to gold. Historically, the gold-to-silver ratio has averaged 50-1, but right now, it's hovering around 88-1. That means silver is deeply undervalued and has a long way to go to catch up. Now, let's put this into perspective. If gold moves higher due to a financial reset, silver could outperform gold by an even greater margin. So the real question is, what happens if silver demand surges at the exact same time that the dollar weakens? Could we be on the verge of the biggest silver breakout in history? Let's break down the price predictions that are shocking even veteran investors.
so if you buy $10 million worth of gold and try to sell it all at once, does that mean you have capital gains? Or does it not, just because it is transactional? That would be the question that I would want to ask. And when you talk about it being transactional, the way that the law we're a long ways away. Just like Bitcoin, everyone always talked about, well, it has to become more adopted. Anything has to be adopted. We have to kind of relearn our history, because the way that most of the laws read, Dunnigan, is that, well, you own you're a barber in Texas. Well, I can pay you in gold if you'll take it. You may not want it. You're not required to take it. I can go pay my property tax with it. They'll take it. But if you don't want to take it, you don't have to. Now, if we get to a point where the state says this is money in a digital form, and if you do take it, there's a way for you to immediately convert it into dollars. That's kind of like how we take Bitcoin right now from the public. We don't take it. We issue them a BitPay link. BitPay processes it and immediately wires us the US dollars. So kind of the same thing. So we're still a ways away from that mass adoption. And the truth of the matter is, man, I don't know how many people would know a gold coin if it fell on their foot. Certainly a silver coin would be less and less. But point of it is that if Rick Rule, who, we both hold in the highest of esteem, were to say there's only 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund in terms of asset allocation, well, we're a long way from mass adoption and that kind of thing. Even in the face of states moving in this direction, what we should take away from it is not only are the states moving in this way, which is a very positive sign. Judy Shelton will probably be on the Federal Reserve Board. She is advocating for 50-year treasuries backed by gold. She talks about stable coins that she wants to be pegged against the 50-year treasury. Scott Bessent, the the Treasury Secretary's largest holding is in gold. Cynthia Loomis, the senator from Wyoming, says, let's revalue gold. Never in my career have I heard so many people at such high places.
For years, silver has been seen as gold's less exciting little brother. But what if that's about to change? Right now, silver is hovering around $32 per ounce. But financial analysts, including Andy Schectman, believe that number could be laughably low compared to what's coming. Some predictions suggest that silver could surge past $50, maybe even $100, as the market begins to wake up to its true value. We've already seen silver climb 58% in just 1 year, but this could be just the beginning. Unlike gold, which is mostly stored as a reserve asset, silver is being consumed at a staggering rate. Solar panels, electric vehicles, military technology, everywhere you look, silver is becoming more critical to the global economy. And yet, mining production isn't keeping up. Silver is disappearing faster than it's being replaced. Then there's the gold-to-silver ratio, a key metric that investors use to gauge silver's value relative to gold. Historically, silver plays catch-up when gold rises, but right now, the gap between them is wider than ever. If gold continues climbing beyond $3,000 per ounce, silver could be forced to play a historic game of catch-up, pushing its price through the roof. But the biggest wildcard? Brics nations rewriting the rules of the metals market. If their new exchange eliminates Western manipulation and allows silver to trade based on real supply and demand, we could witness a price explosion unlike anything in modern history. So the real question isn't just if silver will break out, it's how far it could go. And if silver is about to take off, that leaves one last question. What happens to the dollar? Let's find out.
United States Mint production for non-proof bullion, American Platinum Eagle coins, has varied over the years. In 2023, the Mint produced 12,700 1-ounce bullion Platinum Eagle. So, 1 out of 4 people watching this video over the next month could buy one platinum coin last in 2023. The 2024 numbers haven't been released yet. But the point of it is that the mints make them in tiny supply. So they're hard to come by. They sell out fast. And the same thing is true with the UK, with the Perth, with the Austrian mint and the Canadian mint. They don't make many. They're hard to come by. They're worth owning some. And if you believe in anomalies, in historical anomalies, price ratio, et cetera, it's a hell of a buy. One of the crazy things that is hard for people to deal with, and they dismiss so much of what they believed at one point, is because logic and mathematics, and they've had a kind of a counterbalance or a counter. They haven't been. Logic has been contrary to outcome for quite some time. And what's the old saying? The market can stay irrational longer than one can stay solvent. But yes, I like it. It's a good value, but you're going to pay higher premiums than you would like, higher premiums than you would pay in gold and silver in terms of comparatively right now, because the U.S. Mint will make 100 times the amount of gold eagles that they did platinum eagles in a year. If not, well, they'll make well over 1 million of them in 1 ounce plus half quarter and 10th ounce. They don't, since 2008, the U.S. Mint has not made any fractional platinum eagles to my knowledge. And in 2008 was the last year really that I remember getting platinum eagles with any ease. So like it, but maybe tread a little lightly on how much you add to your portfolio.
In conclusion, the U.S. dollar's long-standing dominance in global trade is facing unprecedented challenges, signaling a potential shift in the global financial order. The rise of Brics nations, their move to trade in local currencies, and the creation of a gold and silver exchange independent of Western institutions are clear indicators of a growing de-dollarization trend. Simultaneously, within the U.S., over 20 states are recognizing gold and silver as legal tender, reflecting a loss of confidence in fiat currency amid soaring national debt and inflation. Central banks worldwide are stockpiling gold and silver at record levels, further underscoring the shift away from the dollar. Silver, in particular, stands to benefit significantly due to its dual role as both a monetary and industrial metal. With increasing demand from sectors like renewable energy and technology, coupled with its historically undervalued status, silver could experience a historic price surge. As the global financial system undergoes this transformation, the dollar's future appears increasingly uncertain. Investors and individuals alike may need to reconsider their reliance on traditional fiat currencies and explore the potential of precious metals like silver to safeguard their wealth in this evolving economic landscape. The coming years could witness a dramatic redefinition of monetary value, with silver playing a pivotal role in the next financial reset.
We can, demand for platinum has been relatively stable, if not decreasing, with the electric vehicle craze. They're projected to see a slight increase maybe in platinum mining or production, but the thing of it is almost all of it is made in or produced in South Africa and in Russia. Staying with Trump and saying, we're not going to get rid of the combustion engine anytime soon. You need platinum for its catalytic converter uses. The thing about it is that they used to be the primary catalyst or catalytic converter, or I guess you call it a catalyst. You're the what's it called? What were you in your previous life?
Physicist,
Engineer.
yeah. And,
Yeah,
and manufacturing
so
engineer,
it's called
yeah.
a catalyst, right? Is that what it would be?
Yeah.
Okay,
Yeah.
so it is the primary catalyst. Used to be primary catalyst for unleaded vehicles. It's now the primary catalyst for diesel vehicles because when palladium was so much cheaper and has similar properties, they retrofitted everything. Maybe they'll go back to that. The argument is sound, right? I mean, the argument is very sound that it's way out of whack. It is. It is way out of whack, totally. And you got banks like UBS that are forecasting large deficits between supply and demand. In fact, they're saying as much as 500,000 ounces could be, a continued shortage that much, and it'd be the third consecutive year. So it hasn't been huge, but they're saying it could be higher. To me, I think you should own it. If you own a significant precious metals portfolio, it's third in line for me behind silver and gold. But it's a sound argument. The biggest issue in the retail side of things is that I had two very large orders at the beginning of the year for platinum, 500 ounces each order, two of them. And when I called the trading desk, they said it's a good thing you called when this is January 1, 2, 3, 4, real early in the year. And well, we're getting our allocations right now and stuff's getting real hard to get.